Well, another strong rally in US stocks overnight sees us off to a good start here in the Asia Pacific region this morning. And while the focus this week so far has been on earnings, both here in Australia and in the US, it was the macro that really got the market moving overnight. An announcement from the White House that there would be reduced tariffs on Japanese cars had an immediate impact on the market and the sentiment, and as well, of course, on car manufacturers. And we also saw the impact of an announcement from the US Treasury that the suggested or threatened tariffs on China that were going to come in on August the 12th have also been delayed. And that good news on tariffs and the reduction on them not only fed into positive market sentiment, but it confirmed a view that the stance and the aggressive nature of the tariffs that were threatened are really just a negotiating tactic. They are not a threat to the global trade system. And for that reason, we saw plenty of positive moves in the market. Now, just to give you an illustration of how the announcements had an impact, here are a number of key US listed manufacturers of cars, and you can see the impact on Toyota there. They took off. We saw real support across the board for Honda. They really responding to those reduced tariffs. In contrast, we saw pressure on the local manufacturers. So Ford and GM, both under pressure in trading overnight, in contrast to the lift we saw for the Japanese car manufacturers. And that suggests that markets are taking these moves seriously, and that Japanese manufacturers now have an advantage over local manufacturers because the tariff on cars coming from Mexico is 25% versus the 15% on Japanese cars. So how long that situation will last and whether or not there's a trading opportunity in relative value between the car manufacturers in the US and those in Japan is something for each investor to decide for themselves, but an interesting point out of last night's trading. We saw a number of reports as well, IBM, Alphabet and Tesla. It's interesting to note that markets and investors seem to remain in a very unforgiving mood when it comes to the reports that we're seeing for this quarter. The reactions in the market can be quite severe, and it does appear that a lot of investors are going to punish anything less than perfection. And given the all-time highs in the market, that may well be a justified stance. But we saw that with the reports overnight, and IBM has been a sleeper here. You can see on this chart that it's outperformed some of its more noticeable and headline-grabbing competitors like Alphabet and Tesla. Now, all three reported overnight. IBM had a very strong run in the lead up to this report, and despite beating earnings estimates by about 5% across the board, its shares fell by about the same quantum, around 5%, in what it looks like a classic buy the rumour, sell the fact response in the market. That is, a lot of investors anticipated IBM would deliver a good result. They bought the shares ahead of that result. Now the result has arrived. There's no one left to buy, and so the share price has come off. This is usually a digestion issue in a stock, and upward earnings momentum, as we know, is one of the surest predictors of a rising share price. So some investors might be looking very closely at IBM given the market reaction to their report. Alphabet also reported reasonably well, better than expected revenues and holding up well in face of the challenge from artificial intelligence. Investors were impressed, and Alphabet is trading higher in the aftermarket in a rare positive response to a report. Unlike Tesla, which is under real pressure in trading aftermarket, it also reported after the US close, and there was a big decline of around 12% in revenues based on falling sales. And it's clear that Tesla's well-known problems are starting to hit the bottom line, whether it's their political exposure, the increasing competition in electric vehicles, or concerns about some of their areas of development like robo-taxis. Tesla's outlook is in question. And given that Tesla's shares have been priced for very aggressive growth, if that growth profile changes, it's very likely analyst valuations will change with it. So we could see further pressure. Tesla shares down more than 4.5% in aftermarket trading and seemingly under increasing pressure. Some of the better performing sectors overnight were healthcare. The GE division reported a 15% gain in revenues for the quarter, a very strong start. Turning to the Australian share market, futures are indicating a positive start, a gain of around 0.25% at the open. Whether or not that will be sustained depends very much on how investors treat the banks again. They've been under sustained pressure throughout the week. It does look like some large shareholders are moving out of the banks, concerned about valuations, and that pressure has been turning up in reverse. That is, we're seeing buying in the global miners in contrast to that pressure on the banks. So a real rotation or switch going on in the Australian market. Be interesting to see if it continues today. Another area to highlight is the uranium miners. We saw real pressure on those stocks in trading yesterday. Both Paladin and Boss Energy were down very hard in trading, and that pressure seemed to be related to mooted changes in the treatment of AI and the clearing of a lot of potential obstacles to AI development in the US, including the generation of power. And that clarity around how AI might draw on additional power has hurt Australian uranium miners. Paladin was down 11% in trading yesterday. You can see on the chart here just how severe the fall was after a fairly choppy year so far. Boss Energy down 4% as well. And that sort of momentum reversal doesn't look like a temporary effect at this stage. And investors in that sector might do well to be cautious about the short-term outlook for uranium miners listed on the Australian Exchange.